Let's go to CommSec. Tom Piotrowski is live. How do we start up today? Tom, good morning to you.
Kick off in positive territory by a margin of around 0.25% if we're looking at the futures at the moment. And that's a modest gain considering the improvements that we have seen on Wall Street from time to time over the course of the session. Of course, Pete, the highlight, or one of the highlights of this week was the always going to be the US inflation report. It's been released overnight. It was lower than expected, both at a headline and a core level. The headline rate of inflation, the lowest in almost a year. Moderation in the core rate of inflation, so important because that's what the US central bank looks at, and central banks across the world look at most carefully. So that rate fell from 6.3% to 6.1%. Still well above the target for the Fed at 2%. But importantly, the arrow's pointing in the right way. This is a relief. It suggests that the US Fed will be less aggressive when it comes to their interest rate decision in the next session. They're expected to raise rates by 0.5% compared to 0.75%. That's what sent the stocks higher in the initial reaction. We had the S&P 500 up by as much as 2.8% at its best levels. It's pulled back a little bit since, so it's only up by around 0.2% at the moment. So that's a bit of a blemish, that caution. But you could make a case that investors are just waiting to get that US interest rate decision out of the way before they commit themselves one way or the other to the market. So,
yeah, sorry, I just interrupted you then. I thought you were wrapping up. Tom Piotrowski?
No.
Okay. Do you want to keep going? You finish off your point?
No, I'm good, thanks.
Oh, okay. Have you done your Christmas shopping yet?
I have.
Oh, what'd you get your partner?
A couple of things.
What'd you get me?
Just my full-throated devotion to you as a friend.
I love you, Tom. Talk to you soon.
Thanks.